Hello, everyone. Welcome back to this stream on how to improve stock chase. So, stock chase is the business that we will improve during the stream. Again, this stream is the journey to $100 million. So, we will take businesses, we'll improve them, and we will add more and more millions to the valuation. So, how we can improve stock chase? Last time we did many things. So, last time we discussed about the competitors of stock chase. So we were looking at the attract, engage, convert. I don't know if you remember. If not, please go back and check the first video. So last time what we did, we discussed about those four elements that are extremely important. So there is the attract, there is the engage, there is the convert, okay, and there's the retain. So again, these four elements are essential to take any business and to improve it. So the engage, this is where you will start. So you will start with the engagement element, which is usually the website. So it's the website, the Facebook page, the Instagram, the landing pages, product, people, value prop. So this is here on the engagement, you are analyzing the business. So you try to understand how the business is providing value to the marketplace. Who are the competitors as well? So again, if you remember, we discussed about many competitors that Stockchase has. Again, we are competing against huge company here. So Stockchase is making a couple of a little less than 5 million in terms of revenues, and is basically it's a created stock recommendation for professional investors and retail investors, right? So there's a freemium version, there's a premium subscription as well, and it is kind of competing against many other companies. So last time we analyzed AlphaSense, the Tip Ranks, Seeking Alpha, Koifin, and Yahoo Finance. So here for this business, we will select just a few. So we will select AlphaSense, Seeking Alpha, and Yahoo Finance. Okay, so let's here build another slide. So this Google slide, we'll use it to send it after to the company so they can see what they need to do to improve the business. So first of all, let's start with like stock chase description. So what it does, okay? And here our friend GPT told us exactly what StockChase do. So StockChase is an investment research platform that aggregates and organizes professional stock opinions from portfolio managers, analysts, and market experts. So basically what it does, it will gather opinions. They will from experts that are watching TV, they are reading news, and they will say if you need to buy, sell, they will give opinions, and again based on market experts. So instead of giving its own buy or sell recommendation, it collects what experts say on TV, financial media, and other trusted sources, making it easy for investors to compare viewpoints. So that's basically what it does. So we will collect that. And once we will discuss with the company, we'll of course confirm that that's exactly what they do. So here, StockChase, it's an investment research platform, right? So it's not a place where you can invest, it's more a research platform. So that's an important distinction. So let's put another color here. Let's do it in this blue, no, that blue. So it's a research platform and organizes professional stock opinions. So here, professional stock opinions, boom, tac, tac, tac. Here it's like 28, 28. Let's be fair and let's add a 28 here. Boom. From portfolio managers, market experts, and again, here, instead of giving its own, so again, this is an important distinction. Instead of giving its own buy or sell, instead, another color, let's do another color here. Orange, boom, bold, 28. There you go. Instead of giving its own buy and sell recommendation, yeah, let's do another orange, more darker orange. There you go, boom, more visible. And boom, boom, boom. It's instead of giving its own buy and sell recommendation, it collects what is being said on TV, financial media, and other sources. Sort of. Okay, so that's what it does. So stock chase, you always start with what it do. Okay. If we go back to our four elements, we're still in the engagement part. So we'll do the engage. We'll try to understand the business, what it does, the let's say the its environment as well. So how it's evolving against its competitor, And here, after that, we will analyze how the business is creating, let's say, transforming visitors into leads or customers. So that's the conversion part. So call to action or CTA. So that's the second part. Now we are still in the engagement part. And here, last time, if you remember, we said the the way that you can sell and make money is really you have to choose one or the three of the three options. So either you are pitching that you will save money, so you're saying I will make you save money. So in this case here is a bit of saving money, making money, and you can kind of like argue that it could you can like people are saying playing in the stock market or investing in the stock market, so it's kind of fun. It's a bit exciting, it's close to gambling without being gambling, but it's here, it's basically more the make money. Okay, and last time we said that if you want to have, let's say, a high conversion rate, it's much easier to say, I will make you save money than make money. So if you pitching, I'll make you save money to business, it's much easier to convert them into a customer than making money. Here, it's a bit harder to convince the let's say that you're the expert. Okay, but in this case, it is making money. Okay, it's pretty obvious. So Stock Chase will help investors, retail investors, and professional investors making more money, and we analyzed it against Seeking Alpha. So if you remember, Seeking Alpha is one of StockChase competitors. So here we will compare like the prices. We saw that the prices are very, very different. Here, there's a lot of, let's say, promotion. There's a lot of conversion. So they're pretty strong into the second part, which is the conversion, the call to action. So Seeking Alpha, as soon as you get on their website, right away they will start saying, there is a promotion here, there is a discount, subscribe to our newsletter, we'll send you promotion, promotion, buy now. Much more than StockChase. So we realized that the Seeking Alpha is very, very, very good at converting their users into customers. Okay, and we also analyze AlphaSense. So AlphaSense, which is a research platform as well. So we are in the research platform. As you can see here, right away we land on a landing page. So last time we also said that this landing page is could be improved. So sorry, AlphaSense. I know you guys are making, I don't know, hundreds of. We said that you are valued at a lot, if you remember. So let's look at it real quick. What's AlphaSense valuation? I think it was in the billions or something like that. So what's AlphaSense valuation? So what's alphasense.com valuation and latest round? So they raised like hundreds of millions of dollars. So their latest round, and searching at our last funding rounds, yeah, wow. AlphaSense valued at 7.5 billion with a B, 7.5 billion dollar, and they raised 350 million. So yeah, it was at 100 of millions of dollars, and previous valuation was 4 billion, and now the latest valuation is 7.5 billion. It's not bad. It's not bad at all. So it's 3.5, almost double, 3.5 billion in 2 years. Yeah, that's how we can create some valuation. So this round was led by V Vitruvian Partners, Accenture Partners, GP Morgan Asset Management, and the new investors are DE Shawn Ventures and all of those beautiful guys, Goldman Sachs, Viking Global Investors. That's a cool name. Alphabet, capital G. Didn't know that capital G is Alphabet. So again, revenue multiple. So they have a multiple. So that's how they got the 7.5 billion valuation. That's how AlphaSense got their valuation, is a multiple from their annual recurring revenue. If you remember last time we said there's monthly recurring revenue and there's the annual recurring revenue. So ARR and MRR, monthly recurring revenue and annual recurring revenue. If ever you're pitching to investors, those two metrics are extremely important. So monthly recurring revenue, annual recurring revenue. So here they're making 600 million every year, and it is recurring. So even if they sell zero, there is still revenue that will come in the next year, right? So this is why it's so beautiful, and every investors love recurring revenues and not project-based revenue. If you do project-based revenue, if you stop your project or there's a problem with the project, you don't have revenues coming in anymore. But if you have recurring revenues, now every year you have revenue that will come in, right? So again, you have some churn, so some people will be churning, so it will not be the exact amount, but it should not be zero. So that's why annual recurring revenue, you can raise a lot of money with a huge multiple, which is 12.5x. So they did 12.5x the ARR, and boom, you have $7.5 billion. So that's our friend AlphaSense. So thank you, AlphaSense, and you will also be part of the analysis. So here, let's do boom competitors. So competitors chosen, chosen. That's how we call it, chosen. Boom. Yes, this is chosen for stock chase. Stock chase. There you go. What's happening here? Do we have? All right, so here we have AlphaSense, not chosen. We have AlphaSense as a competitor, but the first we said we will choose, the first we'll do Seeking Alpha, Seeking Alpha. So Seeking Alpha will be our first competitor. Second will be AlphaSense. Again, these are huge companies. So there is AlphaSense, Seeking Alpha. Let's add their URL here. And there you go. Boom. Seeking Alpha and AlphaSense. So that's our second competitor. And we said the third one is, if you remember, if you're listening, student, if you're listening, class, we said that it's Yahoo Finance. So no, just two. Yahoo Finance. Yahoo Finance. There you go. So Yahoo Finance. There you go. So Yahoo Finance has a lot of users. I think it's one that has the most users, the highest volume of users, and we can ask our friend. We have many friends here. So we have how many users stock chase finance stock chase? How many? Let's say monthly visitors on Yahoo Finance. Boom. And I think they also have a mobile app. So they have the mobile app, a quarter of a billion, not bad, 250 million. So there's other things here as well. But these are more news. It's more mass market investors, trader and investors. So here, you know what? Let's take this. Yeah, Alpha Sense, you see, fewer and stock chase serve as a niche, focus on expert recommendations. So the traffic is not, it's much smaller, but highly targeted. So stock chase, what they're saying about stock chase, it's much smaller traffic, of course, before we start improving it, because here it will change eventually. Stock chase, it will be very decent, very significant, maybe more than Yahoo Finance. We don't know, maybe, hopefully. Let's stay positive. Okay, so maybe we can have more traffic than Yahoo Finance. That's the vision. Again, the idea is to have a very bold vision. So it's free to have a vision. So let's try to get as much as Yahoo Finance, if it's not more. So everything is possible, especially online. So Yahoo Finance, again, they have 250 million visitors every month. So here, so let's take this shot over here. Why not? And we'll add it. We'll add on the slide. And this is an important point here. So again, so we are always, the way that I like to work is like visualizing everything, and then on Google Slides, these will not be in orders, but at the end we will just send it to the company. So at the end, I'll share that with the company, and they will just know how to improve their business and become much bigger. So again, competitors chosen here, Yahoo Finance. So let's get the link to Yahoo Finance. And here, Yahoo Finance, boom, that's our URL. And no, not this one. Okay, boom, boom. Yahoo Finance. Why this one is small? I don't like this. Let's improve it. Let's change it. There you go, everyone. So I think top three competitors, top three stock chase competitors. Boom. Okay. So here, seeking alpha, that's the first. Here, we can add a few things. So here, it's like 250 million monthly visitors. Sometimes you will see monthly active users. So that's another way of saying it. Here is like visitors. It's okay. So monthly active users. How many do they have on their app? So I know that they have app. Can you please? I will not mention please because OpenAI said that that costs a lot of money on their server. So no please to ChatGPT, but I'm of course always respectful. So can you please give me the an estimate of monthly active user, and it will understand monthly active users of Yahoo monthly active users on desktop and mobile and per country. So per country by devices. Please present it in a table format. Boom. So here presented, there's no public. Come on, just to give me some estimate. All right, there you go. Boom. So USA, Canada, UK, Japan, India, Australia, Germany, France, Singapore, Hong Kong, Taiwan, rest of the world. Or sometimes you will see ROW. So ROW, if you remember last time we discussed a lot of TLW, three-letter word as well, if you remember. So ROW is rest of the world. So here you see mobile. Whoa, you see? Mhm. That's why I did this. I did this analysis because you have to be mobile first. So all of those platforms, they will look beautiful on the desktop version. Every time the executive, the whole company, they will be working at their office and they will look at the website on a desktop. But the reality is their users will be consuming the information on their mobile, on this thing, on this device. So the website has to work as well on mobile. And in this case, as you can see, there is much more people that are using mobile. So there is more people. Even the global internet traffic is much more mobile than desktop. Okay. So here, this is important, and this we took that information. So trading view, there you go, boom, 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 and here we have users of Yahoo Finance. So here we'll have the geo, and the geo, the region around the world, that will be very important when we will be starting advertising campaigns. So here we know exactly the market. So USA, Canada, UK, Japan. Japan in other companies was the most profitable region amongst all of them. So Japan and Germany, these are very profitable regions. Okay. So of course, USA is the biggest out there, but I'm talking here in terms of profits. So in terms of profits is basically how much you're paying, how much you're making. It's one minus the other, and you see if you're making money or you're losing money. And of course, you're in business to make some money. You don't want to lose money. If not, you will just do other things. So Germany and Japan, sometimes they are very, very profitable. But let's use green because red is a bit scary. So let's use green. Which green was it? This one, yeah, there you go. So green and Japan, as I was saying, sometimes they are depending, of course, it depending on what you're selling, but Japan and Germany in other let's say markets and environments, especially if you're selling technology and if you don't need to ship anything, it's very, very, very profitable. So of course, the biggest out there is USA. So you don't want to ignore USA, of course not. USA is easy. Canadian traffic, usually on the Canadian traffic, what I saw is like people are curious. They will be clicking on ads. They will be coming, but they don't convert as quickly as the American. So USA traffic is by far the biggest volume, the most expensive one as well. And in terms of ROI, here the ROI will be more in Japan. So ROI, ROI, which is return on investment. You see, another three. You know what? Let's do it. We'll do. You know what? Just gave me an idea. Okay, so we'll do one. It will be called three-letter word sheet. Okay, no, not a folder. Folder where how can we delete this? Move to trash. Boom. New page. Yeah, there you go. Three-letter word. TLW. So the three. There you go. Three-letter word. More. Bigger. 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 Okay. Three-letter words. There you go. So TLW. Let's do here 24. TLW, which is a three-letter word. So again, that I mean that's a joke. Okay, you can just tell people, hey, do you like I don't like TLW three-letter word, but that's the reality of like in business, people they love using three-letter words. So we already discussed annual recurring revenues. Then you have M. What is M? What is M? Monthly recurring revenues. There you go. Revenues. Then we said, what did we said? Monthly active user, monthly active users. So here, and we said just now ROI, which is return ROI. It's no, I don't think people says ROI. I'm just kidding. So return on investment. There you go. So return on investment. Okay, these are really. There's other stuff. I mean, I can continue forever here. CPA is cost per acquisition. Acquisition. Sometimes you have CAC, customer CAC, customer acquisition. What is it? Customer acquisition cost. You want more? Let's do more. You have CPA. We said last time you have CPC, click, cost per click, cost per click, and its cousin. Its cousin is PPC, which is pay per click. Now you have another one. Let's do another one. Why not? Let's continue. Let's continue. So we have another one, which will be SEO, search engine optimization. You have another one. Let's do AO. What is it? Order value or contract value. Average order. What is it? It's average contract value, which is ACV. You see, even I'm forgetting because there's so many ACV. And the most important one is TLW, three-letter word. Again, that one is a joke, okay, but you can use it. Let's do this. Boom. Okay, and we will add more and more here along the way. So what did we have here? Pay-per-click, SEO. We discussed it. Monthly recurring revenue. Okay. Here we had a bit more. Yeah, we had B2B, B2C, B2, all of these guys. So let's go back here. So last time we discussed also B2B, which is business to business. We said B2C, business to, drum roll, customer. You also have the fancy one, B2B2C, which is business to customer. Okay, now you're getting fancy. Now you're getting fancy, and people will say, "Oh my God, you are so smart." I have another one, which is B2G, which is business to government. Government. There you go. So that's what we discussed last time, and I think that's enough. That's enough for now. Yeah, that's enough for now. All of these. Okay, let's go back to what we were saying. So we were here seeking alpha, stock chase, and all of that because we saw MOU and we start discussing about ROI, which is return on investment. There you go. So on the return on investment, and because we said here, if you remember, if you're following, we said that ROI is return on investment, and the biggest ROI usually, I mean, this is not for, we'll see, that's a hypothesis. So we'll have to confirm our hypothesis. And that's when you become an expert is you have some ideas, you have some vision, and you confirm them with data. It's not the data that will tell you stuff. You need to have an instinct, you need to have a vision, you need to have a gut feeling. And the gut feeling, sometimes the people that are way too rational. They don't like that word, gut feeling. But once you start having experience, you will start recognizing patterns. So when you see those patterns, you already saw the same story unfolding in front of you. So you will have the gut feeling. You will know that, okay, this could work. So that's why sometimes you need to have this instinct, this gut feeling. And I think they say the gut feeling, the way that it works is when you were in your mother womb for 9 months. I don't know if you remember. Not a lot of people remember that phase of their life, but it is an important one because you get all the emotion from your mother, what she's feeling. You will get those emotions, and that's what we call the gut feeling. So the more experience that you will eventually have in a giving field, the more gut feeling you will start like feeling, and you know that, for example, Japan, Germany could be very profitable. Let's test it into this business as well. I've seen it elsewhere. Maybe that could also work for stock chase. So again, the biggest volume will always be the US. So here the US is biggest volume. Biggest volume is the US. Biggest volume. There you go. Boom. Biggest volume. And Canada is not bad. We said again, the Canadian market is interesting. They will click. They will click a lot. They will sometimes purchase, but not as fast as our friend, the American, American, America. So USA, Canada, UK, of course, they're all very good markets. Here, there's also Australia, Australian, the Aussie, amazing accent, by the way, Australian. I was talking to an Australian yesterday. It was like amazing, amazing accent. That's my favorite one: the Australian, the Aussie accent, and the South African. Those two English accents are wonderful. So here, USA, Canada, so all English speaking countries, they are very profitable. So you can sometimes put all English speaking country in one campaign. You'll have another one. Of course, Japan and Germany, they do speak English as well. But I will recommend you to also do campaign in Japanese in Japan. What a great idea. And also another language, German in Germany. See? It's pretty obvious, but again, not many companies, not many websites do that, right? Same thing, Singapore, smaller region, but again, they have a lot of money. Something to worry, I mean, not to think about Japan is sometimes it's a good idea to open an office in Japan because those guys they like to see that you are in Japan and you're not trying to sell them stuff from abroad. So if you're serious about capturing the Japanese market, you need to be able to open an office there. It could be just a point of, I mean, more than just a point of presence. So of course the website has to be in Japan, in Japanese, and but it's they will look into about us. They will see if you have an office there. So if you have an office, that will increase your conversion rate, and it could be good for the ROI, which is return on investment. There you go. All right. So here, Stock Chase. These are the friends. These are the competitors. So Yahoo Finance, TradingView. TradingView is a very, very, very interesting platform. If let's say you want to start trading and you don't know from where to start, you start with TradingView. So you can open here an account. It's very simple, and you can just like start seeing stocks and like all the prices and things like that. So, for example, Apple, it's a very, very interesting platform. And again, it's free. I mean, you can upgrade to have more stuff, but it's free. And it's let's say you want to look for Google. So Google, which is Alphabet. So Google launch chart. And as you can see here, this is like you can add. I was just doing some comparison with other things. So this is Google. As you can see, there's going up, down. So now they're maybe hitting a little resistance, and you can. I like this view, by the way. This one is interesting. Okay, that one is even more interesting. So my favorite view is baseline. As you can see, there's stars here. So baseline is interesting because I mean, I like seeing colors, and I don't like those things. It's like very noisy. Okay, I know there a lot of people will just like start checking like candlesticks and stuff, but it's I prefer much more this one, which is less noisy. You see, already like we're less like you need to reduce your stress level as much as you can because there's so many distraction from everywhere. it's so hard to be focused. So that's why if you like beside this one and that one, you see this one is already more stressful. You see, do you feel the stress? I don't know about you, but I'm a bit stressed here because like there's a lot of things and it's spiky. You see, like you can get hurt when you die. You see what I mean? Versus here, it's much more. It's like you're looking at like sky is the limit. You see, so here you just go. Sky is the limit. You can zoom out. You can zoom in. Another one again is the baseline. So instead of the area, you can just go baseline. And now here you have the red, which is bad, and the green is there. You go. That's good. So again, even better. So this is good. Like two colors is better than like. I mean, you will decide. But again, candlestick. I don't know why everyone is using it. Everyone is using candlestick, but I don't like it. I don't know. It's like I don't care what happened here. Like something, yeah, this will I mean it will go back up and everything. But like you're too short term. I don't like day trading. Like I tried it, day trading. If you want to be extremely stressed and have even more gray hairs, you do the day trading. It is like extremely stressful and because I mean you're looking between like morning and afternoon and yesterday and today and like you're let's say you're driving a car and you're too close like you're just looking at what's happening like in front of you you can miss I mean you're not looking far enough again that's my opinion you can argue you can tell me that you prefer day trading and day trading is the best thing in the world I've tried it I found it extremely stressful so I prefer much more just doing and here you can do auto and logarithmic okay so there's many things that you can also do so again all that to tell you I can show you other things here that you have so for example this when you open this here watch list detail and news okay you have oh this is interesting you see so instead of looking at like the spikes and the candlesticks and what is happening here in this candlestick like the real thing that you have to look is earnings so is the company profitable or not? Okay. So technically, and this is a there is a correlation, it's a direct correlation between if the company makes money and the price. The price. Okay. So here the stock it's 355 for Google. And if it makes money, it will go up. If it loses money, it will go down. Again, this is a general rule. Now you have a million exception this is not an investment advice. This is my opinion. I mean, it's not my opinion technically. If the company makes money, it's a good sign. If the company loses money, you don't want to lose money for too long. Now you can argue that you're investing in the future, you're doing some innovation, there's this and that, but technically you need to be able to make money as a company and that's your I mean, of course you can do good, you can plant trees, you can do other things, but it's like the purpose of a company is very simple is to make money. Is to make money and remain legal and you're legal, you're compliant and you make money. And these are the only let's say not the only and of course you can like do good and don't sell bad product and don't sell toxic food and things like that you see what I mean so you have to kind of have some values but if a company is losing money it's not a good sign if it makes money I mean it sounds very obvious but there's so many meetings that every time like I'm the one in meetings that is like sometimes getting angry and I say guys are we going to make money with this thing yes or no okay because it's been hours we're talking about this feature and this thing and this project but is it going to yield some results some revenues or not so that's how you kind of like realign the conversation again you have to make money you have to remain legal you have to do good you have to have let's say a nice environment and a nice working environment and all of this but the company has to make money and how you can see instead of again looking at the candles instead of looking at those oh what's happening yesterday and today and tomorrow I don't care what happened yesterday and this morning and this afternoon. And don't look, don't be too close. If you're too close of the tree, you're missing the forest. So don't just like put your face in a tree. Just like zoom out. You have to zoom out. And there's an expression that says like, in case of doubt, you zoom out, right? So let's zoom out. We'll zoom out. There you go. Boom. We can zoom out. Okay. So don't look at like after. And again, day traders they will say other way other things and they will prefer just doing day trading but I seriously don't understand so what you have to look is news and opinion and income statement and quarterly report and annual report and quarterly report and you have it all here you have it in TradingView. So if you go on TradingView, again, here we're analyzing Google. So you can see here earnings. And one of my favorite is this view over here. There you go. I don't know if I can zoom. Yes, I can zoom. So here you have the earnings. And let's say this is Q1, Q2, Q3. So again, the Qs are the quarters. So when you see Q1, Q2, Q3, let's add, these are not three, these will be our exception, but these are important acronyms. So here is quarter, one, two, one, two, three, and four. And sometimes you'll have H1, H2, H1, H2, which is half a year, one. So the first half of the year, the first half of the year, and second half of the year. So Q1, Q2. Okay. So these are sorry, H1, H2. So H1, H2, these are half a year. Q1, Q2 is quarter. So that's how what's happening here. Boom. Okay. And Q1, Q2, Q3, Q4. So if you go here, and this is my favorite, let's say, behavior. So you have this little circle, which is an empty circle, and you have the green one. And surprise, surprise, there's some money that came in that Google did not expecting it. So it's a upswing surprise, right? So it's green and there's like 2.4. Most probably these are freaking billions or something like that, no? Because like they're 44 billion. So most probably there's like we're talking billions here or something like that. So again, don't quote me, but most probably. I mean, they are making here. It's market capitalization. They're making like the value of the company is 4.33 trillion. So now we're in the T. Okay, we're not in the billion anymore. We're in the trillion. So again, these are just numbers. Okay, so you can go crazy, but let's stay here on planet Earth. And as you can see, revenue to estimate. So a couple of things. So here it's earning per share estimate, EPS. We'll not get into the like. We'll have another one, which is this is the digital marketing. This is more like the business three-letter word. This is the business. Okay, and there's another one. We'll have another one, but we'll keep it for another session, which is three-letter word. Boom. Okay, and we'll have the financial three-letter words. Okay, so financial, which is another here. It's a financial and stock market, financial and stock market and stock market. Three-letter words. There you go. Okay, so here let's add just our first one, which is earning per share. So boom, EPS, earnings per. I think it's in plural. Earning per share, EPS. So there is earning per share or per share. There you go, earnings per share, and that's the formula. It's basically a company net profit divided by the number of common shares it's out. So there's that, and there's market capitalization, which is important. Market cap. So sometimes you will see here, where is it? There you go. So market cap, I don't know if it's like market cap or market market capitalization. So that's another one. This is like the value of the company. Oh, there's a Z. There you go, Z. Okay, don't be mad. All right. So let's go back to our case, our current case, which is we go back to StockChase. Again, if you remember, it's a research platform, professional stock opinions from portfolio managers, analysts, market experts. Instead of giving its own, it collects what experts, or maybe I can become an expert someday. StockChase, we'll see. Maybe you can. Can they become an expert? Can anyone become an expert? How does it work? Let me see here. Profile. Can anyone become a top expert? How can I better invest in smart invest? This is okay. So let's analyze the website and let's see here the traffic. And again, eventually we'll be able to. Oh, here we said like earn. Yeah, we said earn, and here it has to be this earn $30. Okay, this earn $30 has to be in the menu. Okay, so I think last time we said something like this. So let's go back here. Boom. So here has to be on top. So let's do a quick, yeah, can I do this? Perfect. Let's have an arrow. No, the other one. Let's have an arrow. Let's make it much bigger. Let's be generous. Boom. Change the color to red. Red is important. So this has to be on top. There you go. That's recommendation number one. It's an easy, quick. What I like to do usually is quick fixes, right? So here you do quick fixes. So these are the, let's say, the, phases of improving a business, any business in the world. Usually, I like doing it in four phases. So phase number one is the audit. So you're auditing the business. Okay. Let's make it bigger. Okay. Let's go big, 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 big. Audit. So here it's current situation. Current situation. Situation. There you go. And we are here. Let's get like we are here icon. We are here icon. There you go. We are here. This one. This one is nice. Do you agree? Yes. Thank you for agreeing with me. So we are here. So currently we are here. Boom. Okay. So we are currently here. Second is the plan. Once we audit, we'll do the plan and recommendation plan and recommendations. Address. Then it's building, and here is launching and scaling. So I do also those phases when I'm creating campaigns. So when you are creating marketing campaign, that's how you can also do. So let's do something like this. We are here. Oh, this is nice. There you go. So we are here, we are currently here, which is the audit and current situation. Okay, phases of improving a business. Let's make this guy a bit bigger. There you go. So these are the phases of improving a business, bold phases of improving a business. So now we are here. We are currently in the audit. Let's do another color, which is, let's do red. No, not red, blue. There you go. We're the audit current situation. Okay. And that will be, we are here. Okay. These are quick fixes. So in the audit, let's do another one. And here now we're in the audit. Okay. By the way, I love Google Slides. Google Slides are great. Google Docs, it's great tools. It's like whenever you're working with a team, the first thing, let's say that should be a reflex. As soon as, let's say, you have a project or you're working, could be you could be alone or with people, and as soon as you have like people that are working with you, you can just go and collaborate on a Google slide. Okay. So here, what's the audit? There you go. With current audit is quick fixes. So you start with quick fixes. Quick fixes. Second is that requires a bit of requires some development, And here is like let's say medium project, big projects, big projects. Now you would ask me, how do you, okay, current situation. So this is, let's say 1.1. Let's do 1.1. 1.1, 1.2, 1.3, 1.4. There you go. So again, now we are here, boom, we're here and we are here. Chick, chick. There you go. So we are here and we are here. Quick fixes and require some development. So then this is quick fixes. Now let's have another one, which is quick fixes. And here are the quick fixes. There you go. Now we're in the quick fixes. So these are all the quick fixes. And we'll have another one, which is require some development. Okay, so require some development. So here it will be all the flows. So we'll analyze flows and we will just start having a bit more recommendation in things that require some development. Okay, so let's go back. Now we have, now we're in the engagement part, if you remember. So engagement, and now we will analyze the conversion. So how the website is converting users. Okay, so let's draw the flow. So we had it here, stock chase flow last time. Yeah, this is what. So this is how last time we saw the flow. So first you You log in, you do log in, there's a sign up, you have to accept. There is now you're logged in and nothing, we didn't get like a convert, there's a promotion, there's this, there's that. It's just like it went back to the website, which is a big problem. It's a big problem because I mean, you're missing a great opportunity of converting users into customers, right? So here, let's do claim the offer versus sign in without forcing the user to check a box like stock. You see, so here claim the offer, and we were analyzing seeking alpha, and as you can see, last chance 20% site wide claim offer. So there's many offers, and here it for like it kind of like it is a funnel, and you go straight into start for free, try premium for 7 days, free trial. Okay, so maybe stock chase has to have something like this. So this requires some development, and this is in the flow, right? So flow improvement. So that will go in second, flow improvements. So here, flow improvements, and now you have a landing page. Okay, so here we'll analyze the flow. So current flow and like proposal, current flow and proposal, proposed flow. There you go. So current flow and proposed flow. Okay, and here we will analyze base. We will analyze seeking alpha flow, and here is like yeah, current flow. So this will require. So let's do the quick fixes first. Okay, so let's go back, log out. Here, let's say we're logging in. So log in. This is good. Log in with Facebook. Okay, and Facebook. Why Facebook? Let's go back here. This is let's sign out. Let's look at like the login, create an account, log in. You see Apple and sign in with Facebook. Interesting that they have Apple here. Say create a free account. Okay, so they already have, and this is the difference. So here, invest smarter, not harder. Mhm. Making informed investment decision with Seeking Alpha. New, get unlimited access, subscribe. Okay, excellent reports or testimonial, and be informed. There you go. So create free account. So that will be their flow. You see, remember here. So how we're achieving overperformance. So there's those things. Remove ads to premium plan. There you go. So this is an easy one. So that's an easy one. That's a quick fix. So let's put it in the quick fix. So quick fixes. Boom. So that's another quick fix. And now we will, let's say, number them. Okay. So quick fix. Eventually we'll number them. So here it's recommendation. So here it will be recommendation 1.1.1 or something like that. Okay. Or ABC. Maybe we can do ABC. 1.1. No, zero point 0.1. Let's keep it simple. So this is rec 1.1.1. Okay. There you go. Recommendation 1.1.1. There you go. Okay. So this is putting this thing on top. There you go. Then we can remove the plan. So here we have recommendation to premium plan. So if you click remove ads, so here let's add a square. So let's add a square. So here transparent and red. Red is good. When you're giving recommendation, using red as a color, it's a good thing because like it means that okay, you have to fix something, right? So artificial intelligence courses, MIT. So these are ads. So remove ads. Here you can send it to premium plan. Okay. So here it's basically that's another quick fix. Let's continue with the quick fixes. Okay. And here, if you have any ideas, just send them to me in the chat. And so again, another one here is like Wealthica. Wealthica is the portfolio tracker. Okay. So here you have a Wealthica portfolio tracker and accept all. Okay, and here this is all your financial accounts in one place to simplify your financial life. So get started. Okay, and that's how you can technically manage your portfolio, but we're not there yet. Okay, so here for tracking stocks you have a watch list. Watch list is interesting. So let's log in again. Let's log in. There you go. Oops, not this one. Let's log in. There you go. Okay, now I'm logged in. I don't know why like the avatar is not showing here, but it's technically what happened with the watch list. Why the watch list disappeared? Watch list disappeared. Guys, come on. Why it disappeared? Watch list. And here no watch list, so watch list disappear. It is important in my opinion, like the one of these, let's say you have soft conversion, so one of the soft conversion that you can have is creating a watch list, because that will bring people back to their website. Okay, so here why the watch list disappear. Okay, so here watch list disappeared. Okay, so go back on watch list. Where's the watch list? Watch list disappeared when logged in. Okay, so watch list disappeared. There you go. Here it's watch list. Watch list disappeared. Disappeared like this. Watch list disappeared suddenly. So I don't know why. I don't know what's happening here. Why it's disappearing. Okay, so here this is an important soft conversion. Okay, so as a soft conversion, you will like you want to create some reason so people come back, right? So here, let's say, and of course we need to track things. So the watch list is how many watch list tracking. Are we tracking it? Okay, so how many watch lists do we have? And if you remember from the attract, engage, convert, so here let's get them back. So the attract, gonna put it here, boom. No. Okay, I'll make another visual just for the slides. So let's make another visual. So here it will be attract, arrange. How can I ungroup? Ungroup. There you go. Engage, then convert and retain. There you go. There you go. Okay. So here, can I just bring it like this? Retention, and that will be our cost per. Another we forgotten very important three-letter word, which is KPI. KPI is a very important one, which is KPI, key performance indicator, key performance indicator. There you go. So that's an important one here. So the key performance indicator are the metrics that you will have to track in order to understand the performance of the business. So here, key performance indicator. There you go. And you will need to know watch list. So that's an engage. That's a soft conversion. So a soft conversion would be, let's put it like this. Let's send it to the back. Order back. Send it to the back. There you go. Okay. And here you will have watch list. How many watch list? Okay, so from the visitor watch list conversion rate, like percentage, and here it's all in percentages, right? So how many do we have that are checking the watch list? So that will be the first one. But I don't know why it disappeared here. Oh, my watch list is here now. Okay. But disappear from the menu. It's not a good thing to making stuff disappearing from the menu. People are like, they saw it and they get lost. Connect your brokerage to track all your, okay. Discover stock. Okay. So connect your brokerage and track all your stocks. Okay. Link your watch list is learn more, connect. And now it goes here. But it goes to the homepage. It should not go to the homepage, please. Don't make it go to the homepage. Come on, guys. Don't make it go to the home page. So plus, that's another one. So there's a cross reference. From what I'm understanding here, stock chase is also related to Wealthica, and there's stock chase here, and there's Wealthica. Dun, dun, dun. Can we get the logo, please? Open new image, new tab. Can I get it? Yeah. So when you see here CSV, it's good. So that means we'll keep the resolution. Okay. So all right, stock chase and Wealthica. There you go. Boom. The stock chase, I think it's like, let's start with stock chase. Okay, we'll have to be focused a bit more, but there's a cross reference. So there's a cross reference between stock chase and Wealthica. But let's add it here. Okay, and there's, I think there's some synergy that is getting created here, and but definitely you don't send it to. So here you have Wealthica. Yeah. So this goes to Wealthica homepage. Connect. It should go. Listen, when you're sending a visitor to the homepage, the problem is he has way too many options. So he will have like so many things that he has to click on. So for example, you land here on the homepage. There's how it works. There's security. There's professional. There's so many links here. There's like too many things. There's a video here. They can watch the video. There's things that are flying around. So there's like there's many things that are happening, and you get them confused. If we go back to the basics, you have to stay focused, and it's much better to land on a landing page. Okay, look at those guys. Alpha Sense, Alpha sponsored result. Okay, these are pay per click, which is PPC. And are they going to send it on a home page or on a landing page? And boom, now they are on a landing page. So you have to use a landing page. You don't want to send your visitors to the home page. And even this landing page could be much like could be improved by a lot. Okay, because it's like there's a lot of text here. Like blah, there's too much text. Like I don't understand why. Like no one will be reading here. You see, so that's why you need bring your logo up and just like a couple of like empowering European companies to defy doubt with faster data. Like whoa, it's like too wordy. Make it simple. Even if you're like if you're $1 billion company, make it simple. Like you're still talking to human, which is human to human, not business to business. Or and some people will say like people to people. Okay, but anyways, so make it less wordy, easier to understand. But as you can see here, business email, phone. So that's the landing page. It's a landing page, and it's not the home page. But even here, you have like too many things. Get started for free. That's fine. You can keep get started for free. And another good thing about it. So let's give them some compliment. So another good thing about it is like they have like the only color that is different is from everything else is blue, and blue is the call to action. Get started for free. Get started for free. That's fine. You have a login. That's okay. But again, this footer is way too like there's too many things happening here, and you don't want like a big footer because these are all exit doors. Okay. And here, let's say you click on I don't know. Let's say you click on something interesting, which is like say I don't know, tech media. Boom, now you're gone. Now you're out. Now get started for free. Okay, it's okay. So there's get started for free, but now there's interactive tour. Okay, but all that to say, you don't send your traffic on a homepage. You send it on a landing page. But you see, I got distracted. I got distracted by the footer because like you give me like too many things, and there's some nice animation, and I will like most probably I will click somewhere and training sessions, boom, and now I'm elsewhere, and there's like other links, and 0 out of 0 found this useful. You see, so like I'm lost. I'm out. Like I didn't land. That's why the landing page, like a very important concept, is a landing page. Like you need a landing page, and here it's much better if we go back to our attract, engage, convert. It's much better to send your users here attract. You know what? I will add another one, and the most important one, and this is where you start making millions of dollars with pages, right? So and it's like the landing page. So some other people will call it funnels. So you can have funnels, but here it's like landing pages. So page, right? So many pages. So let's do landing pages. Okay. And here you have, let's make it a lot bigger. Okay. And let's give it a bit more. There you go. Landing pages. There you go. That's good. Landing pages. And here you have, like, sometimes in some companies they will call it LP1, LP2, LP whatever, right? So LP1, LP1, which is like the most important one. You have LP2, LP2, which is landing page 2, LP3, and stuff like this, right? So you'll have here landing page 1, landing page 2, and here you'll have also ads that are related to that, to those pages. Okay, so here you have like LP3, and now you have ad campaign. So you'll have like, what is this thing? So here you have like LP1, LP2, and you will have your guy over here, Google, no, not this one. So you'll have your ad and your advertising campaign, boom. So here you have advertising campaign, advertising, ad campaign, ad campaigns, okay? And here you have ad one, ad one, like campaign one, sorry, campaign one, campaign one, campaign two, campaign three. So you have here campaign one, campaign two. So let's make it a bit smaller. Okay, so campaign one goes on LP1, campaign two goes on LP2. There you go. You got where we're going with this. Okay, so LP1, LP2. So you have LP1, you have LP2. Okay, let's make it smaller. You have LP1, you have LP2, you have, you see, and now you have campaigns that are going on landing pages, and you don't want, and that's how you make money. That's how you make, like, I like in some companies we had landing pages. They were not that beautiful. Actually, it was an ugly landing page, very simple. It's a very simple page, but it was making like close to 15 million, 15 million per year on just a very simple page. And it was a buy now or free trial or start now or something like that. It doesn't really matter. It's just, it's more targeted. It's better than sending traffic on a landing page. So all that to say here, guys, stock chase guys, please send the link on, send this traffic on a landing page, like on a landing page of Wealthica, and not just like sending it on the homepage. So please, 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 let's go back and send it on a landing page here. Okay, so don't send it here. It should send on landing page on Wealthica. So that goes connect. So that goes on a landing page. Should go on a landing page and not, should go on a landing page and not the homepage. The homepage. Please never send the important traffic on the homepage, because people are lost and they will not convert. So here, this is recommendation number. These are all quick fixes. I mean, unless they don't have a landing page, but I mean, yeah, I will still keep it as a quick fix. It doesn't require that much. I mean, you can say that it requires some development, okay, but it's most probably they have a landing page. I'm sure they have. Let's find a landing page. So let's say at least send it to get started, create an account. So let's say you don't have a landing page, send it there. That could be a landing page. That could be considered as a landing page. So in the meanwhile, let's say they don't have a landing page and they don't want to spend any minute on creating a landing page. Just send it here for now. You see, so you can send it here. I'll put it there. So you can send it. Let's have more room. So this goes here, this goes here. So this goes to Wealthica, which is should not go. Let's put some red, which is bad. This is bad, bad, bad behavior. Red, bold, red. There you go. It's bad, and it should not go. It should go on the landing page and not the home page. So use the sign up. For now, you can use the sign up. And here, what is this thing? It should like redirect, send traffic to a landing page, not the homepage. Homepage. There you go. Okay. And by the way, I will also present all of those recommendations to the company one by one. So watch list, we need this conversion. Okay, we need this metric. Then we have, let's go back where we were now. Okay, watch list, we were here. So I logged in and I went back to the, I went back to nowhere, which is bad. You have to log in and go somewhere. Okay, so after login, you have to go somewhere. Which that's there. So here, let's put it here. Watch list disappeared. Okay, here after login, and actually let's yeah, this is watch list disappear. This is KPIs. So I will call it X. Okay, and here it will be KPI needed. So we will ask them for all of those percentage, and I will share those percentage with you. But what we need is watch list. So how many visitors are they getting? So here you have how many visitors. Okay, so here is visitors per month. Visitors per month. Okay, engagement. Oops, engagement is actually yeah. It could we can call it as a soft conversion. So these are soft conversion and hard conversion. So like soft conversion or mini conversion. Let's call it micro conversion. Micro conversions. Boom, which is a watch list. That's a micro conversion, which is it's like engagement, right? So here it's a micro conversion. We're not making millions yet, but it is something that we want to track. So boom, boom, there you go. And here it's there you go. So visitors per month, that's we need this metric. Okay. Engagement is well, like in terms of engagement, what we can require is how many, let's say, more visitors, more that stayed that more than let's say a few seconds. So visitor that stayed visits. So here it's visits or sessions. Like Google is now calling it sessions that are above, let's say, 20 seconds. Okay. So these are qualified visits. I prefer visits. Visits. So here it's qualified visits. Qualified visits. So let's call it QV. Qualified visits. Okay. So how many visits are staying longer than 20 seconds? How many visits are how many visits above, let's say, 3 pages? 3 pages. Okay. So how many visits above 20 seconds? How many visits above 3 pages? Micro conversion, retention. This is, we'll look at it later. This is here is renewals. So if you remember the annual recurring revenue, so here it's it's renewal, renewal rate, it's churn rate, churn rate, churn rate. How many people are churning? Churning meaning they're leaving. Churn equals like leaving, like they're canceling, right? So cancellation, canceling. Okay, so churn rate, renewal rate, these are all, it's a bit like, let's have a little more space. There you go. Okay, so visitors per month. And here you have like campaigns and ad. And here you have a notion that is important for you to understand is you have the pull and the push. So let's do push and pull. So pum pum pum. No, we don't need the new page. So here you have push and pull. So you have pull and push. So here you have push marketing and pull marketing. Okay. So push and pull marketing. Pull marketing. You have push is like, let's say you're doing media. So you're sending, let's say here it's like you're sending emails, or so push is, let's say, banner ads, content marketing, content marketing. Okay. You have those kind of like people are like you're pushing your message to the world. Okay, so that's push marketing. Okay, here is SEO, like search marketing. Pull marketing is being findable, and this is extremely important. So pull marketing is here is your company being findable. So it's being findable. And as you can see, there's SEO, there's like some like search traffic, right? So search traffic, you have the SEO, and you have the pay-per-click, PPC. Okay, so these you can consider it as search marketing, pull marketing, being findable, or search marketing. Okay, and this is someone that is looking for a solution. Again, that I can discuss it for hours as well, like was like how to do search marketing and pull marketing. pull marketing and push marketing, the big difference here is like people, they're not really looking. So not they are not really looking, okay, at the moment. So you are kind of like making them aware that you exist. Okay. The other one is push marketing, pull, push. So pull marketing is being findable. It's search marketing, and here they are looking. They are actively looking for a solution. And now you have people that are looking, they are searching with a problem. Like I have a problem. For example, I have cockroaches at my place, you see, or I have like rats, or I have mold, I have something that is like I need to get fixed very quickly. So I have a problem. So they are looking by the problem, or they are looking for a solution. I need the next terminator, for example. You see? So they are looking for a solution. So either they are Googling or just searching with the solution. Okay, so they are looking for a solution, or they have a problem. Okay, they are searching with a problem. So either they are searching with the problem, which is again I have cockroaches, or I have mold, or I have like leaking water or something like that, or they're searching with the solution, which is I need an exterminator, I need the plumber, I need something like this. So they're searching with a problem or searching with a solution. Okay, and again, that I will leave that for another video, because I mean we can do hours here, and it's like how you can select the keywords, how you can create campaigns, how you make sure that you're spending on the right keywords. But this is very, very powerful. So here it's very powerful. So pull marketing is when people are pulling you towards them. So they are like looking for you, and you just have to show up. You just have to show up at the right moment. So here timing is everything. In sales, if you've done sales a bit, you know that timing is everything. There's other things, but timing is extremely, extremely important, right? So here timing is everything. So timing, that's why the timing works here. So the timing is everything, and it's especially in sales, it's like that's why it works. That's why our friend Google here, they are valued at $4.33 trillion. T with a T, 4 trillions. It's insane. Why? Because of this. Because of pull marketing, because being findable, because people are paying per click every time you are showing up, you're looking for something. And again, if we go back to Alpha Sense here, I will stop clicking on their ads, because every time I'm using them as an example, maybe I should use other companies as example, and because like I will stop clicking on their ads, because every time I'm clicking on their ads, they are paying Google, right? So Google will be happy. AlphaSense will not be so much happy, because they will know that I'm clicking on their ads. But again, I clicked maybe once or twice. I will stop. I think you can afford it. I mean, you guys are valued at billions of dollars, so it will not. Don't complain. Okay, so again, sorry if you paid a couple of bucks for this training, but at least now people know that. I mean, I'm sure a lot of people already know you, but I mean, people here on those platforms now know that you exist, and it costs you a few dollars. So again, that's why Google is valued at trillions of dollars, because of the pull marketing, which is being findable, search marketing, and it's people, your customers are actively looking for a solution. And again, either they are searching with a problem, or they are searching with the solution. And that's why eventually we will start doing some advertising for stock chase. So here, visitor per month, and here, do we have any ads? So is there any running ad campaigns? I don't know. I'll have to ask the team. Do they have any running campaigns? And this is the attract. You can have Google ads. Again, it could be Google ads, it could be video ads, it could be other things. Search marketing. Now, mainly it's Google. And another one, again here, please don't laugh. I know you'll laugh, but again, please don't laugh. But beside Google, there's Bing. So there's Bing as well that exists. Let me see if it still exists. I think so. But there's Bing. Bing search. Microsoft Bing. Bang. So Alpha Sense. Let's click on their ads here too. Are they sponsoring? I think so. Alpha Sense. Is that a sponsor? Is that an ad? I don't know. We don't know now if it's an ad or not. Is it an ad or it's not an ad? I think so, no? Not sure. I don't know if someone can tell me if it's an ad or not, but it's like looks like an ad, smells like an ad, should be an ad. Let's click on their ads. Boom. Okay. And now, big mistake, they are sending on their homepage. If that was an ad, there you should not be sending on the homepage. You should be sending on the landing page. So again, there's Bing. So Bing do exist. So Microsoft, I don't know why people every time I like Bing. I don't know. I like Bing ads. Okay. Not using Bing ad. I'm not using Bing, but I use Bing ads, which is different. So you have Bing ads, which is yeah, there you go. It's micro grow your business with Microsoft advertising. So you can also do search marketing with Bing ads. So here you have Bing ads. Let's do Bing ads. Okay. I told you not to laugh, but I'm sure you laughed a bit, but it's okay. It's fine. As long as you're happy, I'll be happy as well. If I can make you laugh with Bing, maybe Microsoft is not laughing that much. I mean, how much is value? Do you know what's the value of my? Let's look at it. Duplicate Microsoft. Microsoft, they didn't change their name to something else. So they're still Microsoft, I believe. Microsoft Corporation. In the I'll show you something interesting on TradingView. It's like so there's different exchanges, right? So you have different exchange, which is Nasdaq. Nasdaq is the tech exchange. You have Euronext. Euronext is in Europe, and you have Euronext Amsterdam. You have New York National Stock Exchange of India. Sorry, I thought it was the New York Stock Exchange. So it's like National Stock of India. There's the crypto here, the crypto world. This is the Chicago. There's the Chicago Options Exchange. There is FINRA. What's FINRA? FINRA. FINRA. This is Stuttgart Stock Exchange. What is this thing? Anyways, there is many exchange. Exchange, see that as a shopping mall. So stock exchanges. Let's look at like stock exchange. It's like you have the New York Stock Exchange, NY, like all exchanges, stock exchange, stocks, wiki. Let's look at them. List of major stock exchanges. Okay. So here you have the Nasdaq. So there is Nasdaq, which is pretty big, and here is like market cap 36 trillion. You see the New York Stock Exchange. So NYSE, New York Stock Exchange, is 31 trillion. And now you have the Shanghai Stock Exchange. Okay. So here you have like 10 trillion. Okay. So the Japan Stock Exchange, you have Shenzhen, you have Euronext, you have Hong Kong, you have all the stock exchange. Okay. So stock exchange, I just wanted to show you something cool is when you do, let's go back, Microsoft. Okay. So we're looking for Microsoft Corporation. This is the ticker. Okay, let's MSFT. So MSFT, that's the ticker. Okay, there's another code as well, but this is the ticker. And what I wanted to show you is where is it? Why it disappeared? Yeah, there you go. Google, Microsoft, Microsoft, Microsoft. Sorry for that. Okay, so Microsoft, what is this thing? Microsoft, where is it listed? So what I wanted to show you, and I'm not able to find it again, was let's do it again. So here MSFT, okay, Nasdaq, and now it's all what the heck is it? I'm not able to show it to you. I wanted to show you like there's a crown. I don't know how to get it again. All stocks. There you go. Maybe because I added this thing. Okay, Microsoft. There you go. It is there. It's there. Okay, don't move. Don't move. Okay, MSFT. So MSFT. What I wanted to show you here is this little guy. There you go. So this little guy is very important, which is a crown. You have a crown icon, all right? So this is the primary exchange. So when you're looking for a ticker, so here you're looking for Microsoft Corporation. Let's say you want to buy Microsoft Corporation stocks, okay? So you go here, stocks, you have funds, you have futures, you have Forex, you have crypto, you have a lot of things, okay? You have the economy, you have bonds. Bonds is like very safe, very secure, very boring. Okay, stocks is a bit more exciting. You have the magnificent seven as well. You have the S&P, but again, let's leave some stuff for other videos. Let's try to stay focused here on what we have to do today. So what I wanted to show you is on Microsoft Corporation, you have here a little crown and its primary exchange. So it is listed in the Nasdaq stock market. So a Nasdaq stock market, it means you're listed on a market, and all those exchange. So see those exchange as shopping malls. Okay, so virtual shopping malls. So when you go on like major stock exchanges, is like you enter in a shopping mall, and now you have like different things. You can buy food, you can buy shoes, you can like go to the theater, you can buy clothes, you can do many things in a shopping mall, right? So those exchanges are shopping malls where you can buy securities. They call it securities. Security, not because it's, I mean, that's the term that it's called. You can buy stocks. Okay. And when you see this crown, if we go back, Microsoft, you see this crown, NASDAQ, it means it is listed on the primary exchange, which is NASDAQ. So MSFT. So now because you're cool and you know it and you own some Microsoft, so you can just, instead of like typing Microsoft Corporation, you can just do MSFT. Boom. Now you have everything. And maybe that's why like I wasn't able to see the crown anymore. And now, because it's first, you see? Okay, now I understand. So when I do Microsoft, let's say you're typing, sometimes some people will type with their indexes. So Microsoft, there you go. Back in the days, some people were using their indexes to type. I hope you're not this kind. I have nothing against those people, but it's just funny. It reminded me like a good time at the early days of the internet. Many of you guys, millennials and Gen Z and Gen Y and Gen all the gens, I don't know like how many gens are there are out there, but like you don't remember like some people initially back in the days they were just using their indexes to type. So MSFT, MSFT, Nasdaq. Here you go on. There you go. And now Nasdaq is a primary exchange. Let's go back here. So Nasdaq, and if you expand now MSFT, you have to be careful because sometimes there's other stuff that are called MSFT that have nothing to do with Microsoft. So MSFT is okay, Microsoft Corporation, and now you see it is listed in many places. So let's expand, and we see. So the primary one, it's the first. Okay, so that's why we're not able to see the crown icon anymore. So Nasdaq is the first. The other one is BM. So it is also listed in Mexican stock exchange. So if you're in Mexico and you want to buy Microsoft, I mean, you can buy it on the BMV. BMV. You have, what is this? Boats. So this boat, what is this thing? This is Warsaw Stock Exchange, Bolsa, Santiago. You see, you have the Swiss Exchange, SIX. You have the Vienna. So if you're in Vienna, you can buy it on the Vienna Stock Exchange. Okay, what is it? Turquoise. That's interesting. TSX, Toronto. So if you're in Toronto, people in Toronto they speak so fast. I don't know why people in Toronto speak so fast. English is insane, but it's like if you're in Toronto Stock Exchange, you can buy it in the TSX. So and there's other exchange. Okay, so all that to tell you that it is primarily listed in the Nasdaq. Okay, now Microsoft exists. If we go back, if you remember what we were discussing a few minutes ago, we were saying that Bing still exists, and we wanted to see the market capitalization. Why it's not there? Because I was zooming. There you go. It's there. 2.86 trillion. Not even 3 trillion. Come on, Microsoft. You're not even 3 trillion. Don't disappoint us. I mean, you have OpenAI. You have many things. Bill Gates. Bill Gates is not there anymore. But I mean, what's happening? What's happening? So, but Bing do exist. Okay, you're at 3 trillion. It's good. It's many trillions more than many other people, especially me, maybe. Not maybe. So Bing Ads is still there, ads.microsoft.com. Okay. And me personally, again, please don't laugh. I know that you're laughing a bit, but like Bing Ads, it's still exists. And what happened, something cool, and I'm hearing you laughing so loudly. Please stop laughing. There's also Yahoo ads. So if it goes on Bing, it will be also displayed on Yahoo. So let's do Alpha Sense. Let's click another of their ads. No, we're in Google here. No, we don't want Google. We want Bing. Bing ads. Microsoft. Not even at 3 trillion. Come on, guys. You're not even at 3 trillion. Don't disappoint us. You can make it. You can make it to the 3 trillion. We believe in you, Microsoft. We believe in you. So there, Microsoft is a lot with like big companies, like a lot of big companies, banks, and like huge companies. They will be using Teams. So they use Teams. They don't use Slack. They don't use other, let's say, messaging. They will be using Teams. So they are very corporate. They are very integrated, embedded in corporate Microsoft, right? So, but again, be more open, be more cool, be more. I'm about to say googly. Microsoft, be more googly. Let me see this. Googly, googly eyes. No, not googly eyes. Googly definition. So Google have it. I've been like I visited like the Googleplex in Mountain View. I'll show you here. And it was funny. I was with friends and it like people that I was working with, and we were riding the bikes, the Googleplex. So Googleplex, and I'll show you the bikes. They have like funny bikes. Googleplex. So we took those. We didn't know that we weren't allowed. And back in the days, we didn't have like TikTok and Instagram and all of those things. So we could have just made a video, and we could have been also like trillionaires, like Microsoft on TikTok would have been very viral. So we took one of their bike, and we were like enjoying, and it was like a great. It was a great time. And they have a definition, and it's called googly. I don't know how to googly definition or meaning the definition. Okay, so Google, Google. I don't know if you saw there. They made a movie. Googly meaning way of throwing playful. Yeah, there you go. Googly. So googly, googly. So that's the thing. Googly definition. So googly primarily refers as a is that the bowling. What is this thing? So, anyways, googly mean they will say that googly. It's a playful adverb of googly, means wide-eyed, starting expression, whatever. So in Google, they will say, "Hey, you have to be more googly." So maybe Microsoft, if you become a bit more googly, you'll be able to get to the 4 trillion. Right? I don't know. Don't take that as a strategy advice. I'm just having fun here. Okay, so all that to say, Bing ads could be useful. And once you're in Bing ads, let's go back to Bing, Alpha Sense. We clicked enough on your ads. Let's go in Bing, just Bing, not Bing ads. Search Microsoft. And here you do Alpha Sense. There you go. And now you have Alpha Sense. Maybe I don't think I don't even think it's like, let's say you do research platform AI. Let's say you do research platform AI. Is it Bing ETM source? Aha. So that's how we can see that they are paying for this traffic. So it is an ad. And I don't know if you saw it. I'll show you here. So this is seeking alpha sense. So I'll show you how I was able to see. So boom. So that's the URL that I clicked on. Okay. So alpha sense trial, blah 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 blah. And here UTM source. Eventually we'll get deeper into what are all of these means. Okay. So UTM source, you have medium, and as you can see here, PPC. PPC it's pay per click. And you have campaign search, brand, ad group, alpha sense, core. So we know exactly how they are like structuring their campaign. Not exactly, but we have an idea on how they're structuring their campaign. They have other tracking as well. Okay. So UTM source, Bing, PPC. So it is but it's not even displayed. It's insane. Like we don't even know that it's displayed, right? But we know it is like Bing, and so that means they're advertising on Bing ads. You see, so I'm not the only one. AlphaSense, that is valued at a couple of billions, also like advertising on Bing ads. So I'm not alone in this universe that know that Bing still exists. I'll be curious to know if, sorry, I'll be curious to know if employees at Microsoft are using Bing or not. I don't know. If you're an employee at Microsoft, that could be an interesting survey. If someone can like survey people at Microsoft and try to know if they are using Google or Microsoft or Yahoo. So again, what I wanted to show you here is, let's say, research platform, stock market, AI, something like this for investor, research platform for investors, AI. So that now it's oh, you see, so this they're first. Ah, you see, all of those guys that we're analyzing are here. Interactive brokers. That's another one. So here, are these ads or they're not ads? How come they're not saying it anymore? It's insane. So let's look at it. We'll look at it together. So are these ads or they're not ads? So let's open the link. Boom. PPC. Boom. That's an ad. Let's look at the other one. Seeking alpha. So that means like the two that we selected Alpha Sense, we selected Seeking Alpha. Makes total sense because this is exactly the one that are spending a lot of money to be there. So Stock Chase that will be comparing its business to those huge guys. Disclaimer. What is this disclaimer? So here, boom, boom, Alpha Sense. PPC campaign, you see PPC campaign, source of acquisition, PPC campaign. So they are paying. And here it's this keyword. What is this keyword? Research platform for investors with AI. Research platform for investors. That's a good one. So let's add here Google Ads. No, let's do it here. What do you want to? Let's do it here. So it's here. It's Google Ads keywords. Keywords. There you go. Boom. Okay, and who's advertising on it? You have Alpha Sense, and let's look at and what we can do here. Now we're doing some competitive intelligence. Okay, so now so all of this is an ad, but why? Ah, sponsored. I saw it. I don't know if you saw it, but I think I saw it. It's here. You see, sponsored. It's here. So this is really tricky. Bing, and I'm sure Google, they're doing the same, right? So sponsored. Oh boy, I didn't want to do that. Again, Alpha Sense. I clicked on way too many of your ads. I should stop. But again, this is for educational purpose, and I'm sure you'll be fine. I'm sure you will not lose $1 billion for this. Maybe it will cost you like a couple of dollars. Now it will be like I click this. I don't know, maybe $20. I owe you $20. If ever you want to contact me, I'll send you $20, and you will be equal. Okay. I don't mind sending. That's another sponsored. There you go. Sponsored. This one is sponsored as well. Now I see this is sponsored. Fund next. These are not sponsored. And now you have their AI, Copilot, and these are organic. So you have organic and you have pay per click. So funded next future interactive broker. Interactive broker. That's by the way, that's one of it's a great broker that I'm using it. I'm using interactive broker, and I love this platform. Site visitor over 10 in the past month. This one is interesting. Site visitor. They're saying the site visitors. That's interesting. I don't think you have that on. I don't think you see site visitors on Google over 10,000 in the past month. Interesting. But why IE? What the heck is that? IE, interactivebrokers.ie. Let's open it. Drive broker, I owe you maybe here it's like $5. IE, what is IE? Accept. Let's accept some cookies. Fractional shares, IE. Fractional share, Bing Max. What is this? Bing Max. Okay, so again, now what I wanted to do is just take a screenshot of their ad. So we took the first screenshot. It's here. Okay, Alpha Sense. Let's take the second one, which is Seeking Alpha. So here you have reviews. Ah, site visitor. You have it here. That's interesting. I don't think you have that on Google. This is the first time that I see that. 100K in the past month. So let's take that guy over here. Boom. And let's put it somewhere. Okay, Seeking Alpha. There you go. Okay, so now we have an idea on how do they advertise, because eventually we'll do the same for stock chase and we'll have some inspiration so we can see, because what you do, even, and this is what's interesting, even if you are competing against companies that are making billions of dollars, you can just show up above them in Google ads and in Bing ads and in Yahoo ads. So even if those guys are valued billions of dollars in valuation, and stock chase is a little less, I mean, we can take stock chase and put it much, much higher than Alpha Sense and Seeking Alpha and all of those interactive brokers. Interactive brokers is interesting. Is like, I think, like the founder of Interactive Broker has a very interesting story. Very Interactive Broker, IB Brokers, and here founder. He has a very, if you want to check it out, Thomas Petrify Interactive, and he has a very Hungarian. It's a Hungarian born American billionaire businessman, and and it's interesting. All the founders of like big financial companies, they are all billionaires, not millionaires. They are all billionaires, right? So, for example, let's say Michael Bloomberg. Michael Bloomberg also that has Bloomberg, right? Net worth. Let's look at his net worth just for fun. Michael Bloomberg, sorry, I mistype your name. $100 billion. $100 billion. And it's a software company, Michael Bloomberg. That's another billionaire, right? So you have Tom, but this one is an interesting. So there's a documentary somewhere on YouTube. So if you want to check out this his life, it's very interesting. He was very early in having a platform for the stock market. And again, it's a great platform. I'm using it. I love it. It's interesting to buy stocks, right? So you can just, if you want to open an account, you just open an account, and so they're advertising here. So let's take, why not? Let's take also their ad for inspiration. Of course, we will not do copy paste. We'll just do copy, inspiration, adjustment, and paste. So it's not copy paste. There's a couple of steps between the copy and the paste. Okay. So all that to say that if we go back to what we were saying a few minutes ago, is Bing ads is also interesting. So you have Bing ads, search marketing, which is pull marketing. So here you have search marketing and pull marketing. Okay. So you have search marketing, boom, and which is pull marketing, which is timing is everything, which is people are looking for you, for your solution. Either they are looking with a problem, so I have a problem to solve, or they're looking for a solution, or they are looking for a random thing that like it's doesn't make sense. But it's I will show you another very important concept. Let's have a funnel here, okay? And let's delete the column, delete the column, and here we'll have different colors. So let's add red, boom. Let's do yellow. Let's keep it simple. Yellow, and let's do green. Okay, that's fine. And here I want it to equal 6, not 666. Let's do 8, 8, and 8. 666 is not cool. So a concept that I wanted to also show you is you have the funnel, okay? And we'll discuss a bit more when we'll get into the conversion. But it's important when you decide on the keywords that you want to include in your campaign. So the keywords have to be segmented in three main categories. So you have here, let's get a text from somewhere. So you have, these are four letters word, not three letters word, but you have top of funnel. Okay. So top of funnel is people that are kind of not really aware of the problem, and but they're looking, they could be the right people, bad timing, right? So here it's like could be right people, bad timing. Okay. And so these are those folks. Let's make it a bit smaller. So boom. So right people, bad timing. Then you have the middle of funnel, which is kind of right people, aware of the problem, aware of their problem and need a solution. Like they're aware of the problem. They don't know if they need a solution yet, but they are kind of aware of the problem. And here you have bottom of funnel. So the bottom of the dirt. That's something else. That's another documentary. So the bottom, it's not bottom of the dirt here. I was referring to something else that we don't need to explain in this video. So the bottom of the funnel. So it's the bottom of the funnel. And here is people are looking for a solution. So people are looking for a solution. So people are looking for a solution. Okay. So here you can call it tofu. Tofu. I wanted to do like a viral video eventually about tofu and AI, and I will not say it here because some people could steal the idea. But it's I'm coming with an interesting and funny video. So here you have tofu, mofu, and bofu. So middle of funnel, top of funnel, and bottom of the funnel. So here, let's put it bold. Let's make it bigger. 60. So tofu, mofu, and bofu. Okay. So that's top of funnel. And once you when you'll be ready to start like creating campaigns, and you need a list of keywords. So here you'll have a list of keywords. So it will be structured like this. So again, I'll leave that to another video. But like campaign, you have your ad group, and you have keywords. You have keywords, and here you'll have tofu, bofu, mofu, and stuff. Okay, you have tofu group. So here you'll do groups. Actually, it's here, ad groups, and even campaign. So I'll show you. I'll leave that to another video. Okay, so campaign, ad group. This is how you do it on Google Ads. Okay, and again, extremely powerful. And it's not by mistake that like our Google market cap is at 4.33 trillions. Okay, they are at 4 trillion. Why? Because it works. Their system works. So if you pay on, and if it's well structured, and again, I've been like in other places, I've been running campaigns close to $2 million per month, which is like close to like above 60,000 per day, every day, every like 62 something, 62, 500 sometimes, every day, 62,000, 62,000 in spend, in clicks. People were clicking, and it was in 21 languages. 21 languages. We had thousands of different campaigns, so it was a huge monster, and it was working. And I had the unlimited budget, so I was able to spend as much as was not humanly, but like the system was allowing. And I had some trouble because I wasn't able to spend enough. I needed always to spend more, spend more, and we were spending millions of dollars in clicks every year, so close to like tens of millions, and it was profitable. So the way that you can see that is for every dollar that you're spending in ads, it should get you back at least four. So for every buck, you're getting 4x, five more. It's profitable, so you can increase. You can get like 8 times more, 10 times more. If you can get more, I mean, you're a genius. And it's extremely rare that people are first of all tracking. So there is two kind of business in terms of tracking. And you know what? We'll keep one. Let's do this bofu mofu. Let's put it here somewhere. Okay, and I'll make it nicer another time. Okay, so but it's in terms of tracking here. Let's have a KPI. Let's talk a bit about the KPI. So you have two kind of businesses. So you have the business here is like business intelligence, intelligence. Okay. So BI, sometimes you'll hear BI in a company. So who's taking care of BI? No one. And sometimes you'll ask a question. What I ask as a question is, so they will say, we do this, we do that, we do this, and whatever. And is it performing? So let's say you want to sell. Let's say you want to sell to a company. You want to sell a service. Okay. So you ask them, what do you do? What do you do? And they will say, we do. So these are your questions. Okay. So let's do a quick sales segment. Okay. So this is your segment. So questions to sell your service, your whatever service, your whatever service. Okay. Or solution. So question to sell your whatever service. So here you ask question number one, hey, how are you? What's your name? Okay. But like let's say you had the conversation already going. So you say, hey, what do you do? Boom. And now the answer will be we do one, two, three. So here it will be this is not super convenient. We do yes. So here this is the answer. This is not very convenient. Guys, you should do it differently. So hey, what do you do? Okay, let's do it that way. What do you do? This is question number two. That's not convenient, guys. Come on, mock-ups. Contact me. I will tell you how to improve your UX. There is something that is wrong here. You should try. You should do your UX like Workflowy. Workflowy is a freaking amazing way to. You see, like what's happening here. Not able to. There you go. Okay, whatever. So here, you know what? Let's remove the one, two, three, four. Okay. So here it's question. What do you do? Okay, let's do it that way. Question. What do you do? Answer. We do one, two, three. Okay. Now you ask another question. Are you satisfied? Are you satisfied? Satisfied. Depends who you're talking to. But usually they say, yeah, very satisfied, which is bullshit. So here they will say, because they will not be talking to you. Okay. They will say, I don't have time. So here, what do you do? We do one, two, three. Are you satisfied? Yes, of course. Yes. Yeah. Yeah. Of course. Of course. We're satisfied, which is BS. Usually is BS. Most probably it's BS. No one is fat. No one, no business in the world will tell you we are making enough money. Like we're making too much money, you see? Unless they're doing something that it's weird. Okay. But it's usually normal companies, they always want to make more. Like Google is making 4 trillion. Microsoft is making not even 3 trillion, 2.86 trillion. Come on, Microsoft. You can get to 3 trillion. I'm sure you can. Okay. But it's like all companies in the world, they will always want to make more. So yeah, the yes, of course, is BS. And this is just to, how do you know? How do you know? How do you know? You see? And now that's how you can call here. It's like you're calling his bullshit, his or her bullshit, calling the BS. So here you're calling the BS and you say, how do you know? And now they will say, because we know. No, they will say, because we're tracking things. Okay. And in other, like before getting into digital marketing, I was doing like I was in a different industry, and I was kind of like I had it to become a lie detector because a lot of people were just bullshitting to me all day long. So I had it really to develop some strategies to find the truth. And one of the way that you can do to find the truth is you ask the same question, but you ask it in a different way and different angles. And sometimes it could be in, and I was kind of finding that you need to ask the same question six, seven, eight times from different angles to find the truth. And the truth will set you free, right? So eventually, when you find the truth, it's much better. So here, how do you know calling the bullshit? So here, because we track things, we track it. And here you are start digging. What are you tracking? What are you tracking? And here is like, again, here you need to be able, like, the person has to be, the company, the business has to trust you so they can open their books, they can open their tracking, they can open their analytics. So you have here establish the trust before you start asking those questions. Okay, because sometimes there's so many people contacting me on LinkedIn, and every time, like, there's sometimes they will ask questions like, hey, how's your day going? And it's like, who the heck are you? Like, I will not share, like, what is your dream? They start asking questions like this. Who the heck are you? I'm not sharing anything before, like, you tell me, like, why do you need this information? Okay, so here, establish the truth, the trust before. So what are you tracking? And here they will say, we're tracking stuff. We are tracking stuff. Okay. I mean, that happened to me so many times. That was exactly like, what do you do? We do one, two, three. How are you satisfied? Like, what do you do in terms, like, to get more sales usually? What do you do for getting more sales? Okay. And some people, they don't do, mm, I will not pronounce, like, I will bleep this, but they don't do anything to get more sales. They just expect that whatever, like, they do operations, they do operation stuff. They're not trying to, like, provoke sales, right? You need to, like, you need to force it. You need to do marketing. You need to do advertising. You need to, like, have salespeople. You need to be talking to more people. You need, like, prospecting. You need, like, a million things. Like, no one knows you. No one really knows you. So you have to do marketing. You have to advertise. You have to have a good product. People have to enjoy your product as well and solutions. So make sure you have a good product before you start advertising. But this is like the that happened to me so many times. So what do you do for getting more sales? We do one, two, three. Are you satisfied with the result? With the result, okay. Yeah, of course. No, or sometimes it be, but are you generating enough? And if they say yes, of course, they're not trusting you here. So they are not trusting you. Okay. So if they get into, like, yes, of course, like, leave me alone, equal, leave me alone. But if they say no, we're not satisfied. Okay, how do you know? And because we track it. What do you track? Okay, what do you track? What are you tracking? Or what do you track? And how we are tracking stuff. And sometimes it's like, I have a guy or I have a girl and they're tracking and whatever, and it's outsourced. Is like, I don't care. I don't really care. This is like, you can read by, I don't really care. I just want money. I just want money. You see, but they don't want to do, like, they don't want to do the work of, like, tracking and improving and iteration. And that's how you, is like, you have to track things, you have to adjust, you have to do things. But usually they will, like, outsource this because it's numbers, it's complicated, they don't know, and it's like, it's not interesting, and they don't really care sometimes. But who really cares about it? Who really cares about it? It's usually the founder, the owner. So the employees, sometimes they do care, they don't care, they just want to keep their position in the company. But who really cares about it is the owner, the one who pays everyone, the one who pays everyone. So this guy really care about the performance. Okay. And now you have two type of companies. You have three levels. Okay. I like putting them in three levels. So you have level one. So level one, which is, let's make it bigger. Level one, boom. There you go. So level one is, let's make it this one smaller. Level one is not not tracking stuff. Okay, not tracking stuff. Not tracking anything. They're not tracking anything. Flying blind. Flying blind. Blind. Bling. Bling bling. They are flying blind. Okay. So here they're not tracking anything, which means they are flying blind, and this is bad. So level one, you'll see many companies flying blind. They're not tracking anything, and they're not understanding why they're not improving. And because not improving here, it's not improving, not improving, and here We've been, sometimes you'll hear, we've been doing that forever, forever. We're not going to change now because we're afraid. Usually it's their fear. It's fear. We are afraid to change anything. Okay. So usually they come from being afraid. You're not improving. So the business is not improving. We've been doing it forever. We're afraid of changing anything. Please stop. So here it's like putting their head in the sand. So here is putting their head in the sand. Okay. So this is level one. That's level one. Level two now. So this is level one. Level two. We are tracking. So this is first level. So first level of businesses will be we're not tracking anything, and we have no idea what's happening, and that's it. Okay, so that's level one. Level one, I don't know. Level one and level two, I don't know which one is worse. Okay, I don't know which one is worse. Both are bad. So this is bad. These are bad, bad. So let's put it bad here. Okay, so these are very bad, bad, and let's put it bold. Boom. Let's put a color which is red. This is bad, really bad. The heck is that? Okay, bad, bigger. How can I make it bigger? Bigger. Boom. This is bad. Okay, so this one is bad. Level one is bad. We're not tracking anything. We're flying blind. Not the business is not improving. We've been doing it forever. We're afraid to change anything. They are putting their heads. They are putting their heads. They are putting their heads. They are putting their heads in the sand. Their heads. The whole company. Okay, and it's pretty bad. Very bad. 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 Very bad. Second one, the second one that sometimes I will talk to. So the first one is they're not tracking anything. They don't know how. So usually they don't know how. It's just they're. It's not like because they're. It's just they don't know how. So here is ignorance. It's just like ignorance. It's not like they want to. It's not like they're doing it on purpose. It's like just ignorance. This is here is just ignorance. Ignorance. They don't know why how to do it. How to track stuff. And they think it's very complicated. They will think like it's too complicated. We don't do that. We're too busy. We are too busy. You see, we are too busy, but they don't know like they are just busy bees, right? So sometimes you can call them like busy bees, okay, which is like running all over the place. We are too busy, so you can call them like the busy bees. So everyone is flying everywhere and no one knows where to go. No vision, no nothing. No OKR. OKR is an important one. OKR. One second. Let's add it here. So we are doing it forever. There we are afraid. We are afraid to change anything. And here, there you go. Boom. Okay. Second one, we are tracking everything. So here we're tracking everything. So the second level of companies, it's they know that they are bad and they kind of realize. So it's like ugly truth. Boom, it's a cold shower. Cold shower, we need to start tracking. Now they are tracking everything. Now they have like dashboards over dashboard is like they have so many dashboards. Here is like it could be 100 dashboards. Is like thousands of metrics sometimes. It's like 500, I don't know, like even 200 metrics. You don't need 100, like let's say even 50 dashboards. It will have like let's say tens of like let's say 30 to 50 dashboards. Okay, they will have 200 metrics. Okay, they will have like so many things. It's like a huge Like they have a huge operation. Sometimes it will be big operation in BI. Doesn't have to be like many people. It's just like there's a lot of things happening, a lot of things. So here it's a lot of things, a lot of things in BI, tracking, tools, dashboard. So now that's the other extreme. So this is the other extreme. The other extreme. And this is also very bad. So also bad. So this is also bad. Also bad. And I will keep it in red. I will keep it on purpose in red because it's not good. So this is also bad. Okay, it's not good. We track everything here, not tracking anything. Okay, so here they're not tracking anything, and here is tracking everything. So this is bad. This is also bad. The third level is, you guessed it. What's the third level? The third level is we are tracking the right stuff. We are tracking the right stuff. There you go. And here they will have three dashboards. Let's say three main dashboards. Three main dashboards. They can have like 100 if you want. And here, metrics. Are you ready? And again, that's how much, like this is, I was managing, again, I was managing close to 2 million a month in ad spend. Okay, $2 million a month, thousands of campaigns. We have thousands of campaigns. We have like 21 different languages. So 2 million a month, 21 different language, thousands of campaigns, and I was able to manage everything with two metrics. I was able to pilot the whole freaking machine, the mega engine, with two metrics, only two metrics. And I'll tell them to you someday. No, I'm kidding. I'll tell them now. So I was able to manage everything with ROAS, which is return on ad spend, and this is very valuable. I hope you guys are taking notes or something, or at least enjoying these gems that I'm sharing. So two metrics. The other one was, I'll share it next year. Kidding. Growth rate. Growth rate. So GR, if you want, you can call it GR. GR. So here, I was able to manage millions of dollars in ad campaigns, and I was using only two metrics. Of course, I had a big team, and I was aware of everything that they were doing. I was able to dig down. I had like tens, like close to hundreds of other dashboards. So we had like a lot of metrics. Okay, so we were able to track everything, but at a super high level, all you need is two metrics. So the first one is ROAS, which is return on ad spend, and the second one is growth rate. So here you have, this is profitability, and the second one is speed, like speed of like growth speed, right? So how fast are you growing? How fast the business is growing. Okay, so three main dashboards. And I mean, I had a couple of dashboards, and I had the big, let's say, overall view, and I had like two. This is not really important, right? So you'll have, let's say, this is dashboard. No, this is a map. So how can I look at dashboard? Let's say here, dashboard one, dashboard two. So I had like three main, and I will like, I'll keep that for another video, but I can get like into exactly what I had into those dashboard. If you're interested, you know what, send me an email and we can do that together or stuff, right? So let's use this. Yeah, let's use this. Why not? This color. Why not? So dash number one, dash one, dash two, dash three. Right. And again, you don't need 200 metrics. This is amazing. So here, this is amazing. This is here. It's amazing. So let's have this one amazing here. That's the amazing thing that you can have. And it's almost impossible. Like it's I don't know that many companies that are in that level. There's a lot here in level 1, level 2. There's a lot. Most companies are here. Some companies are here. So here this is most companies are here. Okay, so this is most companies, most businesses. Most are here. Okay, let's change the color now to the blue, pale blue, purple. Okay, blue is nice. So here, most companies are here. No more. More. Most. Some are here, and a very few. This is like almost no one. Almost zero. Like rare company, like almost zero. Almost no one. Rarely. Rarely. You'll see those companies. Okay. So I have dashboard number one, dashboard number two, and that's it. And you can have like dash one, dash two. That's it. And I was able like to manage everything. And I had my graph, and I had those two metric. So I had ROAS one, ROAS growth rate, and I was able to. Is there like a pen or something? How can I draw? Is there like a pen here, guys? Mockups, guys, please contact me. Let's improve your thing. I love it, by the way. I love it. As you can see, I'm using it premium. I love this tool. They didn't endorse me or anything. It's not sponsored. It's just I really love mockups, but it could be better. So contact me if you want some ideas, and we'll improve it together. So I need a pen. Maybe there's a pen, and I don't know how to use this. Pen, pencil, pencil, pencil. No. How can I draw? I need to draw. Give me a pen. Give me a line at least. Shape, line, shape, line. Okay, we'll try to draw like this. This is weird. Okay, bear with me, guys. Be patient. Don't be overexcited. I hope you're not already on Netflix or somewhere just because I was looking for a pencil. So I had, let's say here you had, there you go. Let's do an arrow. Can I do an arrow here? Okay, it doesn't matter. So I had, let's say this is the graph. This is X, you have Y. So here I was able just to get like that's how you make it. That's how you visualize it. And here you had like growth rate, boom, something like this. Here you had like, let's say here, let's put that one in the color. Let's do this one orange, profitability green. And here you had, let's say blue, for example, or this one, purple, no blue, let's do blue. So I had the growth rate, which was blue. And you also have the ROAS, which was, let's do it this way, SAF. There you go. And I'm doing it on purpose like this. So you see what I mean, because you cannot improve both at the same time. And here you have time. So this is your timeline here. That's time. Usually I was looking at it weekly or monthly, right? So you can have weekly, monthly, daily. Daily is for your team. It's not for you. It's just to see if there is anything that is if there's anything wrong, if there's anything with the system that is not working anymore. So you can do weekly or monthly. And here you had your money, dollars, money, 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 money. Ow, ow. So here you had your money. That's your money line. So here you have your money line. Here you have your timeline, and these are growth rate, and that's how you can see it. And you have your overall overall. Again, I can get very into detail for the for overall company. So the whole company. So the whole company. Are we making money? Are we growing? These are the two questions that you need to know at least at the weekly level or monthly. And here is like most important campaign. So which is the most important campaign, the second most important campaign if you want. Okay, so here campaign two, campaign one. Okay. And how do you define which one is more important? Take a guess. Is how much money you're spending. So campaign equals like a lot of cost, big cost, and here campaign one and biggest your biggest cost. Like where you spend your money is technically where you want to monitor. Okay, so the more you spend, the more you need to monitor. And the second is the second biggest, right? And now you can dig in. You'll dig in into like everything else. Okay, but this is like overall, and if it's clickable, so you can click it and you can just get like a view of the whole business, what's happening with the whole business. So again, level one, not tracking anything, flying blind. Level two, we are tracking everything, which is also which is also bad because you're also blind. So you don't know what here. You have no idea what like what is impacting what is impacting like what is impacting what you see. So here again, you track everything. You can track everything with two. I'm telling you, I've done it. You can challenge me on this one. You can say we need two, we need three, we need the third one, maybe. But it's like there's a concept as well that I love that I use with my team is a top two. So here I like doing a top two. Why the top two is so important? So the top two priority list. This is very powerful concept. Is this is again that's maybe I'll leave that more for another chapter, but just I'll explain it very quickly because we opened the subject. So prioritization. So the concept of like good prioritization with your team is the top two concept. Top two concept. It's much more powerful. And I had a debate once with a CEO, with a top CEO and everything, and he was saying, "Why not top three? Why not top three? We're used. We want top three, 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 three." I said, "No, top two is better. No, top three is better. People are used to top. I'll tell you why it's better. The top two concept. Just listen to me for a sec. So here, because you have when you have a two, you have most important thing. Okay, you have the most important thing to do now. So this is like, and usually again, it's like revenue generator. Okay, so here it has to be like equal revenue generation. Okay, so biggest impact. So what like how you can get like a high impact in terms of revenue. So the most important thing, and here is like the second most important thing. Okay, so why a top two works and a top three won't work? I'll tell you why. So here the reason is, first of all, let's say you start having a third one. So now you have two. Okay. So let's say you discuss with the client, you discuss with the business, you discuss with your team, you discuss with anyone in the world, and you say, that's my top two priority. When you show this, okay, when you show a top two priority, it's now you have the most important thing that you have to do, which is most commonly, like in a business, is like this is will get us more revenues. Boom. The second is the second most important thing. Boom. That's it. End of conversation is very clear. When you start having one, two, three, so this is the most important thing. Maybe it's revenue generation, maybe it's something else, but usually it's like important thing. Here, the second more important thing. And now it's when you add the third one, okay? So the third most important thing that you have to do in the business, most important thing that you have to do in the business. So now what's happening? You add the third element. So let's say here you're playing ping pong, you're playing tennis, you're playing any sport, and you're two. Boom. What happened when there's a third that gets on the tennis court. Okay, so what happened here? You will start getting a mess. So here, for example, one is one bigger, or is it more important or less important than two plus three? Okay. So now if someone will say, okay, I can do the second thing and I can do the third thing instead of the first thing. Are you fine with this? So that's question number one. After that, what happened again? What happened if we do two and three? What happened if I do one, then three? Okay, but not two, but not two, not two. Okay. Now, what happened if can I do one, three, two? Okay, so can I do one, three, two? Okay, so that's what's happening. What happened if I do only? What happened if I do here only? Can I only do one and two? Okay, or can I just do? Can I only do? Can I only do? What's happening here? Can I only do? Can I only do like two and three, which is this one here? Can I only do? What happened if I do one and two, but not three, but not three? Okay. Can I start here after that? Can I start with three, for example? Okay. Then one, then two. Okay. After that, can I like so many things are happening here? Top three. So that's why top two is better. A top two prioritization is better because here you have one, two, and if let's say it becomes like a huge argument and like the CEO or the business or whatever is very sad and he wants, so you say other. You say, okay, you know what? Okay, I know that the third and the fourth and the fifth, and we have like 48 different priorities and everything is important, and you have this trouble of like categorizing what's important and what's not. So what you do is like you say, okay, I'll add the third one, but it will be other. Boom. Now what you have, and you don't open it. You don't open the other list. So you have the other list. So everything is hidden. So you have the most important thing that you need to do, like don't talk to me if it's not done yet. And the second most important thing, and that's it. And here there's no questions, no questions, no questions, no questioning. And now here is like pure execution, pure execution. Because you want to be in action mode. You don't want to be like in talking mode. So you want to be here in action mode and not talking and debating how many T? One or two T. Debating. Debating AI. Debating. Questioning. No questioning, pure execution, action mode, no talking and no debating, not talking, no debating, you see? And here action equals money. You see, and results, and results. If you want to be more politically correct, just use result or revenues or stuff like that. So that's why top two concept for prioritization, it's much, much, much more powerful than a top three. Okay. Because here, top three, it opens the door of like a lot of questioning. Like, is two and three more important than one? What can we reorganize this list? Can we do this? Can we do that? And sometimes, initially, yes, it is important to discuss a thing and just strategize. But like eventually, you have just to wrap it up and just do okay execution mode, and you're just executing, executing, executing. Okay. So this is for the prioritization. So all that to say the metrics, the business intelligence, question to ask when you want to sell your service is what do you do for to get more sales? We do one, two, three. Are you satisfied with the result? If they're not trusting you, they will say, yeah, of course, but it's BS. How do you know? You call the bullshit. What do you track? And so on and so forth. Okay. You don't want to not track anything. You'll be flying blind. This is very bad. You don't want to fly blind. You want to, and you don't want to track everything, every single thing that you want to track. You want to track two metrics. Two metrics, not three, not five. Again, that's my opinion. That's my humble opinion. Again, after spending close to 100 million in ad clicks over my career with different clients, you don't need, trust me, you don't need 200 metrics. Okay, I'm confidently 100% sure. Again, you can have 1,000 metric, you can have 2,000 metric, but you have to look at two metrics every week, every month, and that's how you're able to improve your business. Okay, and we'll get into that when we will be into that phase with stock chase, because that's what we're doing here. We're improving stock chase. Okay, so again, we went very deep into like concepts here, and it is important. So because we'll eventually say, okay, that's the most important two things. Now we're just brainstorming together. We're capturing everything that we can do to improve that business. So now we're in quick fixing mode. After that, we'll start having recommendation in what requires some development. So we'll require some development, medium projects. So here, everything medium projects and big projects. And the way to see if I will show you eventually when we'll get there is how we can categorize everything. Because here, to be able to get to the top two concept, the most important thing, okay, and we'll do a calculation on how this important thing will generate the most revenue for the business, okay, with the investment that will be that will be required to create this return. So here, the revenue generation, the most important thing is not because we just decided that this is first and this is no. We will get it there rationally and logically and with math. Okay, and we'll have to see you get the most important thing by logic. Okay, so you will get the most important thing in terms of like when we'll have a huge list. So eventually we'll get to a huge list, and here it's high ROI and low risk and high confidence, high confidence, confidence, high success confidence. Okay, so we are very confident that this thing will generate a high ROI, and ROI is a function of revenue and cost. Okay, so here it's like expected revenue, okay, and cost and investment. Okay, so that's how you get to a high ROI in terms of, there you go. Okay, so the most important thing, and we'll get there by listing everything that we can do. So once we can have, we'll have a full list. So we'll get there by listing 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 everything that we can do. Okay, so we get there by again listing everything everything that we can do. Okay, then we prioritize. Now after that we do categorization. We categorize plus prioritize, and I'll show you how to do it. Okay, I'll show you exactly how to do it step by step. So we'll list everything. We'll list everything that we can do for stock chase to improve, because that's the business that we are doing on this series of video. So we'll list everything. We'll categorize. We'll prioritize, and we'll get to a huge list, and we'll categorize it in everything list. In the everything list, then the most important thing that we can do. After that, the second most important thing, and the everything else list. And once it's like after that thing will be done, we can do the second one, and after that we'll open the everything else. And that's how we can make sure that every week, every month, the whole team is working on things that are generating results. Okay, and not just like being busy bees. You don't want people to be busy bees. Okay, like here. Like we are too busy. Everyone is busy. Everyone is running all over the place. You don't want busy bees. Okay. You want clear direction. You want to make sure that everyone knows exactly what they have to do. And that's how you can create massive impact. Okay. So I think I'll stop right there for today's video. Thank you for listening. Make sure that you're subscribing, make sure that you're following along. There's a newsletter. You can scan the QR code if you want to receive a couple of visuals here that I'm drawing. I'll make them a bit better for like once it's finished. And again, you can scan the QR, you can follow along. We're streaming in many different platforms on YouTube, on Kick, on Rumble, on Twitch, I believe, as well. And subscribe to the newsletter. Everything that I'm sharing here is very based on many years of experience. So I hope you're finding this useful. Take care and see you on the next one. And God bless you guys. Take care.